Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 27th of September 2023 and here are the questions we will be answering today. Why are business families in acquisition mode? How does Krishna Ella view Bharat Biotech's future? Is it time to bottom fish in the stock market? And what happens when sports associations are suspended? The Burman family, which holds a controlling stake in Dabur, is set to acquire a majority stake in Religare Enterprise. Reliance has sealed a series of acquisition deals in the last few years, the most recent one being Metro Cash and Carry. Others like Birla and Nirma too are leaving an acquisition trail, and there is a common thread that runs through all of them. These are all family-led businesses. So what is behind the growing appetite for these acquisitions? Kasturi Akhil finds out.
"2022 was the year when India saw record mergers and acquisitions, notwithstanding global slowdown. The total value of M&A deals stood at over $152 billion in 2022. In 2021, it was $107 billion. Adani's acquisition of ACC and Ambuja from Holcim, mergers of HDFC Twins and Air India and Vistara were a few highlights. But the trend has reversed this year. The value of mergers and acquisitions in India fell sharply by 76% in the first half of 2023 to $3.2 billion when compared to the same period last year. But it seems family-promoted groups are still on the fast lane. Earlier this year, Aditya Birla Group's fashion and retail arm, Aditya Birla Fashion and Retail, acquired 51% stake in TCNS Clothing, the owner of leading ethnic brands like W and Aurelia. In yet another massive deal, Aditya Birla New Age Hospitality acquired 100% stake in KA Hospitality last month. KA Hospitality runs premium restaurant chains in the country. Another family-controlled group, Torrent, is also trying to punch above its weight by trying to take over Cipla. This month, Nirma entered into a definitive pact to acquire a 75% stake in the pharmaceutical giant Glenmark Life Sciences, followed by the Burman family, which holds a controlling stake in Dabur, set to acquire a 26% stake in diversified financial services group Religare Enterprises. Experts say that with India Inc. looking bullish due to increased cash flows, family-led businesses may be hoping to leverage that trend through mergers and acquisitions.
Indian economy now is poised to grow, and that's a normal commentary now. From 3 trillion to 5 trillion, Indian companies are doing very well. As you said, they have largely deleveraged their balance sheets, and the credit quality of banks is also quite good. And stock markets are at an all-time high. If anything, all these businesses or companies can leverage stock as a currency also to make acquisitions. So that is one reason why I would think M&A activity is robust.
According to reports, about 85% of all incorporated businesses in India are family businesses. They play a key role in driving India's economic growth and generating employment. Meanwhile, Business Standard recently reported that Indian companies showed a surge in the amount of cash they generated in the financial year 2023 compared to the period before COVID-19. Companies generated 73% more cash from operations in the last financial year than in 2018-19, shows an analysis of over 300 S&P BSE 500 firms. Capital expenditure by Indian corporates has also seen a rise on the back of improving cash flows and healthier balance sheets. 3 out of 4 companies from a sample of 373 of the S&P BSE 500 index reported year-on-year improvement in gross fixed assets for the financial year 2023. Data from the Center for Monitoring Indian Economy shows the value of private sector projects under implementation has grown, but it is less than government spending, unlike a decade ago. This makes one think if these mergers and acquisitions by large family-led companies come at the cost of greenfield projects.
I don't think so. I think that entrepreneurs are smart. Entrepreneurs will not jump in just because the government wants to increase the capex. Capex availability is an additional factor, facilitating factor. In some respects, they may take the M&A route to enter, but may again expand through capex. So capex actually means that you are getting into a greenfield area, which is a diversification, which also means that you go through the startup process of uncertainties. So in a M&A, you are trying to compress this phase. But one of the key things I would like to underline is that it's easy to get a deal done. It's not easy to integrate an acquisition.
As far as the large family-promoted conglomerates are concerned, some of them, like the Aditya Birla Group, announced capital expenditure of nearly 48,000 crore rupees in India till financial year 2027. Reliance Industries' capex for the June quarter in the current financial year was around 39,000 crore rupees, up from nearly 31,000 crore rupees in the same period last year. A recent global study suggests that Indian family businesses are more resilient than their global peers. Family businesses put long-term stability ahead of short-term gains, thereby ensuring that the organization lasts for future generations. So most of them with deep pockets will continue to drive mergers and acquisitions in the days to come.
Speaking of appetite for business expansion, Bharat Biotech, under the leadership of Krishna Ella, is charting its next phase of growth with a strong focus on becoming a prominent player in the global veterinary vaccine market. The company has ambitious plans for the future, including a substantial investment of 1,200 crore rupees in establishing a state-of-the-art manufacturing facility in Bhubaneswar. Shohini Das caught up with Ella to know more. Let us listen in.
I wanted to start with something when you began Bharat Biotech around 1996, if I'm not wrong. What was the thing in your mind? What was that driving force and that one agenda that you had?
I had only one agenda, that India has to move forward in the biotechnology. There's only one agenda. That's how we coined the company name Bharat Biotech.
And your vaccines, most of them, even the typhoid, which is given to children under 2 years, so have been the safest, have been counted amongst the safest vaccines. So has it always been safety first when you are developing or designing a product? Or it's more of having a novel product and then I'll go for partnerships? Amongst these two, which is your focus area?
I think my first agenda is always a safety. You can have the best platform technology anywhere in the world, doesn't matter. Because you are giving the vaccine to the healthy people. That's the most fundamental important. Whereas antibiotics are all given to infected people. That's okay, cancer, people infected, they're giving a treatment. But here, you're giving to healthy people and also children, the newborn babies. And so most important, the utmost important in the vaccine field is the safety. If safety is taken care of, the next comes is the efficacy. So, look at it, for example, in the when the pandemic time, everybody was looking for the efficacy of the vaccine. The moment the pandemic is over, now everybody is talking about the safety issue.
is scale going to be more important in the coming years, or will it be novel vaccines and novel platforms?
No, we are mostly innovative company. We love to have look at the society problem, take that problem into a research and clinical and development of a product. That's how we got into chikungunya, like typhoid conjugate. The child who gets a typhoid is a young child in this country. So we took that project, and I think we're the first innovators of that typhoid conjugate vaccine in the world.
COVID is over. People are not very keen to, take vaccines. What is your opinion as a scientist? That do people need to take follow-up vaccines every year, or we need a pan-coronavirus vaccine? What is your take on that?
See, the virus is more intelligent than human being. It is changing its shape, color, everything is changing. Virulence, everything is changing. So one has to keep watching. What is that? It's a respiratory pathogen. So respiratory pathogen can be more dangerous for the old people who's got a morbidity problem like heart problem, another problem, diabetic, and all those people are still be more predisposed for that. But I really don't want people to be scared of this COVID. I want them to be healthy. It's not that I want to be commercially exploit the weakness of the human being. No. We want them to be healthy, but we are watching what is happening. So my worry is if this virus goes to the animal and comes back in a different form, that's going to be a scary part.
What are the interesting partnerships that you're having at this moment in R&D with global universities or labs, and what kind of products are you working on?
We're working on one of the, malaria. Now we're working with the GSK and WHO. And now the GSK is going to be, transferred entire technology to us now. And we are now gearing up. In another 6-8 months, we'll be into the malarial program, into their field for the Gavi and African market point of view and malaria. And we're also looking at it, tuberculosis, because Prime Minister's agenda, how to eradicate tuberculosis in the country. So we want one of the best vaccines probably in the world is the BO4B and this Spain company, animal vaccine company in Spain. We are working with them. They can already complete phase 2. It is already entered phase 3 in South Africa. So we are working with them.
And any other areas where Krishna Ella wants to, look into apart from vaccines, therapeutics, biologics?
No, we're in the veterinary vaccines because animals are very critical for the country. Because anybody who's surviving a farmer is only allied agriculture. The dairy, poultry is keeping the farmers alive. Even the crop fails, they're alive on the income on that. So I'm looking at that aspect of it, how to build some innovation in that aspect of it. So we're working on FMD in Bangalore and Pune also. And so we might become one of the largest veterinary vaccine manufacturers soon, globally also.
How much is the investment required in the next 5 years for R&D, for new manufacturing capacities, for getting into new areas of research? If you can give a ballpark number.
Not less than 3,000 to 4,000 crores. Not less than 3,000 to 4,000 crores.
So this will come from your internal accruals, or you will have to go for fundraising from PEs?
We don't know yet, but we have internal reserve. We'll be putting that into the place. But definitely, I don't think we need more manufacturing facilities, but certainly a lot of clinical trial and product development, partnership, and how to execute the projects. And mostly the money is going to go a lot of clinical research.
So what are the challenges for Indian biotech companies, especially startups?
Startups are in trouble in this country. Okay, they just want money, unfortunately, but they have drive, vision, but they're all stuck because the regulatory little get complicated for them. See, we are at least now passed through all the stages. We can delay something 6 months. We don't bother. We just wait, no problem. But startups cannot lose 6 months. Today, many private equity would like to invest in life science. They are not able to invest because the regulatory system is very complicated in the country. I think if the startup has to survive in this country in life sciences, and I think we just need a US FDA model. Whatever US FDA model, let's copy it, put it together. What is working? We'll equal it to that. Then life sciences in this country will survive, will succeed, will take a lead.
The last few days, meanwhile, have taken equity market investors by surprise. The benchmark Sensex index is testing 66,000 levels, falling from nearly 68,000 mark. The Nifty 52 has slipped more than 500 points in just 5 sessions. As investors factor in mounting global headwinds, is there more downside in the offing, or have the markets found its near-term bottom? Which sectors look attractive at current levels? Nikita Vashisht explores in our next report.
An unexpected turn of events in the global markets have halted the near one-way ascent in the domestic equity markets. In barely 5 sessions, the benchmark S&P BSE Sensex index has shed nearly 2,000 points from its all-time high level of 67,900. The Nifty 50, on the other hand, has tumbled 550 points from its peak of 20,222. The panic reaction has been even more severe in the broader market space, where the key indices have declined 3 to 4.5%. The valuation, however, has eased only slightly, leaving room for more correction, caution analysts. For instance, at record high levels early this month, the Sensex was trading at a price-to-earnings multiple of 24.7 times, which has eased to just 24.17 times post the correction. The price-to-earning ratio of the BSE Small Cap Index, meanwhile, has cooled off to 26.3 times from 27.6 times.
We think there is some more gap, some more time until the markets truly find the bottom and starts to rise again. If you look at India on the global scale, we are very well positioned with one of the fastest growing countries in the world, and consumption demand is increasing. Many companies are switching the factory base to India. But in the short term, there are a lot of difficulties that we're facing. For example, the oil prices and export slowdown. And these are short-term factors. So some more drawdown can be expected before markets start to rise again.
Brent crude oil was quoting around $85 per barrel at the start of 2023. It dipped to $70 a barrel in June and is now around $94 amid tight supplies. This has stoked inflation fears across the globe, which also prompted the US Federal Reserve to forecast tighter monetary policy through 2024. As a result, Treasury yields in the US are at their highest level since 2007, while the rising demand for the US dollar has lifted its index to around 106 levels. With pressure mounting on the risky asset class, how should investors wade through this market?
There is some kind of a speculative froth now in the broader markets. Micro caps have actually gone up by 35 to 40%, and we believe that investors should reduce their exposure to small caps and micro caps. We believe that the large caps could actually outperform over that. Banking and the real estate sector could outperform in the near term. Consumer staples and the pharmaceuticals is also a space that we believe could actually outperform.
Sriram Das of Green Portfolio PMS, meanwhile, sees chemicals and metals as contra bets in this market on China +1 push. Thus, investors should wait some more time before nibbling into sectors with valuation comfort. On September 27, global trends will dictate market moves.
He's making plans for an early retirement. Business Standard.
After business and financial news, let us see what is happening in the world of sports. Indian wrestlers are back on the mat, this time in Hangzhou, China, where 19th Asian Games are going on. This time, the wrestlers will fight not just to lift a haul of medals, but spirits too. Last few months were heavy on most of them, and just a few days ago, the World Wrestling Body suspended the Wrestling Federation of India. But why did it happen? And what happens when a sports association is suspended? Sanket Kaul answers.
A suspension, in sporting terms, is the temporary derecognition of a national sports association. Such suspensions are enforced by the world body that governs the sport to punish any wrongdoing by the national associations. Last week, the Wrestling Federation of India was provisionally suspended by the United World Wrestling for failing to hold administrative elections. The International Olympic Committee and World Sports Federations can suspend or derecognize national associations if they do not conform to the code of conduct set by the world bodies. The world bodies can suspend national associations for reasons ranging from administrative malpractices to corrupt practices and unnecessary political interference in running the association. Athletes from suspended associations cannot represent their country in international sporting events. Instead, they can participate as neutral athletes under the Olympic or authorized neutral athletes flag. The Olympic anthem is played in place of the national anthem if a neutral athlete wins the gold medal. Indian wrestlers will join those from Russia and Belarus as neutral athletes at upcoming global and continental wrestling competitions. Athletes from suspended associations cannot avail of Olympic quotas, even if they win such qualifiers. Neutral athletes can only participate in the Olympics at the invitation of the IOC only if some spots are available. Indian wrestlers would not be able to claim quotas for the 2024 Paris Olympics in the upcoming World Wrestling Championships unless WFI's suspension is reversed. World bodies can reverse the suspension of a national association if it finds that the association has adhered to all its recommendations. In WFI's case, suspension can only be reversed after fresh elections take place for the wrestling body's administration.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Memories of their confrontation with former Wrestling Federation chief Brij Bhushan Singh still weighs heavy on wrestlers. Just a few months ago, Olympics medalist Bajrang Punia had said, and I quote, "Getting justice for India's daughters will be a bigger medal for me than the Asiad." Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.